Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for the week ending Friday, January 31st, 2020. Actually, it's also month ending Friday, January 31st, 2020. All right, so let's go over the charts, take a look what happened today. I'll start out here. This is probably the most important thing is that we closed as I suspected we would earlier, well, later in the day as things got going, right on. Look at that. They parked QQQ right on the trend line. Now I'm going out to the daily chart here. We already I clearly stated, posted on the site last Friday, sell signals triggered. We had that, long-standing or long-awaited sell signal with a break of the 60-minute chart. That's the same trend line here. It was posted on the 60-minute chart of NQ and QQQ. We had a nice price channel going there in QQQ, and you can see it here on the daily chart. So that was our sell signal, and that was, an objective time to add and, start a short position. As I mentioned, we got oversold, hit trendline support there the other day. That was a good time to go long and then recycle back in. And you can see where the bounce stopped. It was right at the bottom of that candle. That was about 222.87 resistance. So, or a lot of opportunities to, if you didn't take that signal, as I said on the site on Monday, not objective. In fact, I reversed it to long, but this was a nice recycle back in point. Now, I still, as I said I would today on the members of the site, I'm still, went home short again, but still not to a full short position. Why? And why did I start out with this chart? Because again, we parked it right on support. You zoom it in. This is the trend line off the October 3rd lows on QQQ, and do I think it gives way? Yes, but as I like to say, support is support until unless broken. So why we could gap down below that on Monday, we could just as well gap up, and so pretty much that's next sell signal pending a solid break, especially a daily close below that trend line there. And so that's that. Now let's take a look at a couple other things to watch for next week, and take a look at things that we were watching for today. Let me shoot over to here's the site. So we hit our first target on our TVIX. That's an official long trade. We entered that 2 days ago. 21% gain in 2 days at our first target, and this isn't coincidence. I'm not going to show that chart. We're going to keep this video public because I have additional price targets there, but we hit that first price target, and at the same time the markets hit support today at the trend line. So we maybe get a reaction on Monday if the markets bounce off this support level that we closed at. If we happen to bounce Monday off this support, then VIX will pull back, and TVIX, and maybe we'll it'll be a chance for those that took profits today, took the quick 21% and ran to get in. So put out a trade idea for you guys, but that's not triggered yet. We have a entry criteria that's still pending on there, buy signal pending. And what did I want to cover with you this morning? Okay, let's start out here. The stock index futures and ETF charts right here. So this morning, pretty much I kind of highlighted this. QQQ for the most part has rallied into my maximum bounce target. This line was posted back here on Monday when we hit, and I added my preferred and maximum bounce target. This was my preferred swing target. That's where I mentioned closing out. I had came into that weekend this week short, covered there in the active trading account. And again, I talk about this all the time. I wear multiple hats: swing trading accounts, IRAs, things like that. Still holding on to the mild short position, mild to moderate, and I will again wait to see what happens next week, because we closed on support. There's no reason to gamble and take a heavy short position, because we could very well bounce next week, or we can gap down below it. And so let's just see what happens there. So look, we bounced up to the maximum bounce target, this line here, failed there, pulled that back to the 219.84 level, which we hadn't yet tested from. Remember, we gapped down below it. That was a yellow key level there, and so we reversed, hit it. This was yesterday's close, showing you. I posted that this morning, so that showed actually that May. No, there's yesterday's close. That's where we're rallying in pre-market. I posted this chart, yeah, in the pre-market session here earlier today, and either way, so that's it. And said, we're pretty much at a critical level there, where ideally to keep the bearish snare alive, we'd reverse, go ahead and take out those levels, and continue down. And I think that's what'll happen next week. But why rush it? Again, it's just not objective. You want to either short a break of support or a kickback to resistance. So this is kind of a takeaway from trading. If you were not wanting to short the breakdowns because you doubted it because of the trend, but you wanted to short here, and then when we started going up, you didn't want to short here on the pushback to resistance. It's contrary, at least to my trading style. Your objective levels to short are on the breakdown, not when you gap down that far, especially right before several of the fangs hadn't yet reported. That was another reason. But then when you get a kickback, look, a big old gap. I mean, the reason for that level there, you had a lot of reactions here, and it's the top of a gap. Gap support is often acts as resistance. And so these were your objective shorting ups. And again, this morning it gave you another objective shorting up. Let's take a look at what happened since then. That was this morning's chart before the market opened, and there it was. So this is just showing the after-hour trades here. And you had a little pop right at the open, and they faded it, and we came right to that trend line again. This is what I'm showing you. This is on a 60-minute chart. Same thing here, 60-minute chart. It's the same trend line I showed you on the daily, and that's the story. We closed the week at support. Price action was pretty bearish today. Qs were down, 1.6%. Nothing major, but a nice fade so far. And so again, keep it simple. Let's see where we go next week. Let's put a line on this chart here. Again, this is just a different variation of that 60-minute chart. There's the top of the gap, around 222.73, give or take, and that's resistance. So we're kind of pinched here. Bulls want to see that level get taken out, and of course the previous highs. So this starts to chip away at the bearish case, as does a break above those recent highs. And bears want to see a solid break and close, but 60-minute close, all the better if we get a daily close below that trend line. So that's where we're at. And as I mentioned, I like to use the signal line on the PPO as a trend indicator, and that's the white dotted line. You know what I noticed the other day? I was looking at YouTube. You might not be able to see it, so let me make it a little bit. Let's make it wider, thicker line. So there it is. It's the white line. It's the last of the two to cross. That's why I use that. The blue line's your PPO line. That'll give you more whipsaws. And you can see here, there was our last buy signal there. And once you're below that level, it often acts as support. Once you're above it, the line acts as support. And then you break below, and that tells you the near-term trend is then bearish. And once you're below it, it acts as resistance. I mentioned that in the video yesterday for subscribers. End of day, did it a little before the close, the update on the broad market and the FANG stocks and a few other things. And so that's that. So it keeps the near-term trend bearish, but here's what we need. When this goes with conviction, that opens a door to more downside and those additional targets that I've been highlighting on QQQ. All right, let's look at a few other things. Let's go back to that post from this morning here and close that one out. Next chart below was SPY. And I had pointed out SPY had been lagging. You see, it hasn't been participating as much. I'm seeing, some other sectors kind of weak and was a little bit behind QQQ. So what I mentioned here, we'll zoom in a little tighter for you. Watching to see if this double gap resistance around 328.40 continues to cap any advances in SPY today and the next week. And so that was, again, posted in the pre-market, but it holds true. Why? You have a gap right there. There's a top of another gap right there. There's your whole gap, but so that's pretty much the bottom of the gap right there, and the top of the gap, that defines that level. And so far, it's kept the bulls at bay. 328.40 is a level that SPY has continued to fail at, so that means that's an important level to watch next week. If they can pop it, it doesn't completely eliminate. I've seen increasingly bearish technical, price action and other things like that, but we haven't put the nail in the coffin yet, so that's why I'm keeping things light heading into the weekend as far as index shorts go. And again, remember, if you're a YouTube subscriber, equity of stock market indexes, NQ or QQQ or IWM, whatever I'm trading, represents a very small fraction of what I trade. I like to trade commodities, currencies, Bitcoin, individual stocks, sector ETFs, and other things like that, bonds, wherever there's an opportunity, and also to diversify. If you're just trading one instrument, if you're just trading Apple or Bitcoin or gold, then you're not diversified. You're either going to get it right or get it wrong. Nobody gets it right all the time, but It's like a car firing on all cylinders. Analogy I use is the old cars. Nowadays, everything's electronic, but when I was younger, 8-cylinder car, if one cylinder went out, heck, even 2 cylinders, the car is going to run. It's going to get you to where you need to go. It might backfire and sputter. It's not going to have as much power. That's the same thing in a portfolio. You have 3-year positions going up one day, a couple going down, maybe one flat. Overall, you're going to be okay. You trade one instrument, you're just going to it's up to you, but it's usually where most traders fail, because then they have all their bets are riding on one thing, goes against them, and they start to second guess that position and then close it out at the wrong time. Either take profits too early or take a loss when the trade still looks good and might have temporarily gone against you. So that's it. 328.40. There is resistance above that at 329. Again, that was this morning's chart. Let's just look at it now and see where we went from there. Let's see. I must have used this board. Yep, there it is. 328.40. We never tested it again. Came back down. Now I do want to point this out. I mentioned this, I think, in the video to subscribers yesterday, late in the one in the afternoon, that we have the potential. Now we have it there. Positive divergence on the 60-minute time frame on SPY. So that's something to monitor, and again, for me, another reason why not to be aggressively short heading into the weekend, because if these divergences do play out, materialize, first they need to be confirmed. By that I mean I want to see a bullish crossover, the blue line crossing the white line, to effectively put in a higher low. That's what gives you the positive divergence. Your indicators making a higher low or higher lows with prices making lower lows. That's what positive divergence is. Same thing on the RSI, you can see there. And so, I take it a step further. I've never seen it in the textbooks. I like to wait for the PPO crossover. That gives you that effective low. Until then, these are momentum indicators and they're pointing lower, so they could continue lower. You never really have an effective lower low. So that's what I look for. And so, again, something to watch next week. We still have some pretty key supports on SPY coming up, about 320.31, 319.48 right there. Big old gap below that. If that yellow line's taken out, you can see the gap right here a little to the left. So those are things I'll be watching for next week. I haven't even glanced at daily chart SPY in a while. That's unusual. I always keep an eye on it, but I've been focused on the 60-minute charts. There it is. You can see there's price support right there. Really don't have this daily chart marked up. That's the board I've been using. Price channel on SPY, trendline breakdown, kickback rally, and an impulsive move down right to that support, 320.34. So we'll keep it simple, guys. A solid break below today's lows will have taken us below this support level. We were already well below the uptrend line on SPY. Remember, SPY, I pointed out, broke down in advance of QQQ. QQQ was the last holdout. Those big FANG stocks everybody loves. We had that sell signal there first, and QQQ's at that support level, or that key trend line now. So again, to keep it very simple, and I hate to oversimplify things because it's not. Somebody asked me today, they're busy at work, and I did a midday video. Hey, can you say in 1 or 2 lines, because I'm working, what the video was about? Well, that's why I talk about all this stuff. There's a lot of moving parts, but essentially I said, look, what I'm telling you guys now, we're at support, and the indexes could bounce here, and a solid break below those levels, which again, today's low should do the trick next week. Solid break below today's lows, especially at close. That will trigger more powerful sell signals. This is a longer trend line, this yellow trend line off the October 3rd lows. This was a smaller trend line. What does that mean? Well, the smaller the trend, or the smallest the chart pattern, whether it's a bullish or bearish technical pattern, the smaller the target. Bigger the trend line, the more significant the breakdown, and the bigger the drop to be expected. It's pretty much that simple. There's no set formula. There are, various technical patterns have measured targets you can apply, like a, head and shoulders pattern, cup and handle, rising or falling wedge patterns. They have measured targets you can use, but in this case, really, I'm just looking at the trend line and the scope of this trend line, and that helps determine how far we might go if and when it breaks. Okay, and we'll take a quick look at the futures. Again, this is all from this morning, the charts I posted in pre-market today. For subscribers here, it had the uptrend line, and I said pretty much next sell signal, still pending a break below this trend line. We already had, remember, sell signal 1, just like QQQ back there. That was on Friday. Gap down, we hit trendline support. We hit the same price support in QQQ, hence the reason for, as an active trader, for reversing from short to long, game the bounce, and then back in short. Got a little underwater on that last night, but that doesn't. It was Amazon, a little pop after hours. It wasn't too much. That's not very concerning. And again, so that was this morning, and I already showed you. I think if not, here we are today. Yes, you might say, okay, well, Randy, we're below that trend line. Yes, we are, but as I always say, I don't trade off one chart. Even though this is my preferred trading proxy, I like to trade NQ over, I'll use QQQ or the inverse ETFs and IRA sometimes, and or NQ as well. But even if I'm trading NQ, I'm going to watch QQQ. So the way I have this trend line drawn, yes, we broke below it, but by a small amount. That's not a solid break, nor is it a solid close below. We'll zoom in tight. This chart's in real time right now. There we are, just a hair below it. And as I showed you before, and when you look at the daily trend line on QQQ, we're right on it. So again, I don't consider that a solid break. And on top of that, we hit that, kiss that 89.66, 80, 89.67-ish support I had, and bounce there. So to me, it's all to be continued next week. And then last but not least, the S&P 500 Emini Futures. This was again posted this morning before the market opened. I said ES had lagged behind NQ on the recent bounce. You could see this morning we're down here. NQ was, if you put it on the same scale, up here, and that was it. So let's see. I said the recent bounce off the 60-minute uptrend lines, reversing at the 330-ish resistance, following and Amazon induced pop. So basically, I said near-term bullish if 3,300 is taken out. That's that 3,300 level there, which obviously they failed to do today. And bearish if the uptrend line, which is right here, and the 32.32 support right here is taken out. So what happened is they've already sliced a little bit below this trend line once, and you have a pretty good support zone right here on ES. So I said you need to take both those out. And let's see what happened again. That was this morning. Let's look at ES real quick and look at where we're at. 32.32 right there. We're at 32.27 change, which is, I had the 32.24 support just below. So pretty much they parked it on support, on price support, even though we're below the trend line. So the fact the trend line broken isn't good. All these things factor in. While I understand or realize that the market could gap up on Monday, I think the risk reward is favorable enough. I've seen enough, and continued, some bearish developments, let's say, that I think it's worth going home mildly short. So I don't risk a big gap down that then isn't very objective to add to. Nor would I go home aggressively short with positive divergence here on the 60-minute chart. We get a pop in the morning, it might look like this. Pop up, back test the trend line, if so, or any of these resistance levels, that should provide an objective entry. Although these 60-minute divergences could play out for more than that. So the story remains the same. Right now, things are volatile. Remember, the VIX has expanded. That's why we took the TVIX trade long the other day because it broke out on Monday. But again, for reasons expected a bounce in the market, that's why I preferred to wait for a pullback in the VIX. VIX tested, so the entry on that TVIX coincided with a perfect back test of the downtrend line on the VIX itself, support, and so therefore, the same thing happens. We'll see if we get an objective entry, a kickback rally on Monday. We'll just have to play it by ear. And of course, I'll post some pre-market analysis and levels to watch on Monday once the futures start trading. And I think that's it. Let me see if there's anything else to cover. No, nothing much, but I'll say this too. You had that divergence on ES, but you don't have it on NQ. NQ is going to need at least another thrust down. And keep in mind, potential divergences, I talk about this often. Number one, divergences are never buy signals. Just like overbought or oversold is not a buy signal. It's an indication you may get a reversal, and if it's confirmed, then that's something to watch. We could come down here, hit my first target on NQ at 88.90, and at that point you could have divergence, and therefore I might be going long, reversing there. It's a pretty decent support level. And that would also kind of mesh with that. So look at that scenario, play out nice. Gap down on Monday morning. If I see the futures there, maybe even Sunday evening, Monday morning, because I can control that position. I might, even if I control it, I mean, once the futures open on Sunday night, they're going to then trade round the clock virtually for the week. They shut down a little each day, but virtually around the clock. So, just as an active trader, you can go long there, might get a bounce, go up, back test the trend line, turn around, close the shorts there, go long, game a bounce up there, then reverse it back to short again for the next leg down. That's something I could see. But again, there's so many possibilities. Charts are dynamic. Things are going to change between now and Sunday night and again by Monday morning. So I'm going to pick it up there and leave it off here for now. This has been Randy Finney with Right Side of the Chart. Have a great weekend.